All right, guys, welcome back. In today's video, I want to post an update to the Bitcoin trade I took yesterday. But first, I want to talk about the Bitcoin USD longs on Bittfinex hitting extremes. As you can see here, this is a chart showing Bittfinex longs. As you can see, it's going incredibly parabolic. For whatever reason, Bitfinex is the chosen exchange of whales in the Bitcoin market. And by whales, more so the in Bitcoin you have two different classes of whales, right? You have institutional investors who probably stepped in later, and then you also have OG Bitcoiners, who are just whales just by the nature of how early they got into the market. And you know, the, when I'm mentioning whales on Bitfinex, that tends to be them, but it could also be institutional investors as well. But ultimately, you see this thing going parabolic. It's actually never printed a higher read, and I think it's had the greatest weekly expansion that we've ever seen in history. So you can see here the longs kind of peaked right at the summer high in Bitcoin. So if you remember, July leading into August was the 29K low on Bitcoin, and the Bitfinex long peaked there, which makes sense. Bitcoin had just gone through an accumulation pattern, a Wyckoff accumulation pattern. Whales were probably building positions. This is showing that long positions riding the swing from 29K to 69K. And this brings up another good point: is that like a lot of times when people approach the market, they think, I don't need to think like the way whales think because I'm not trading with that size. And on one hand, they're right. But on the other hand, if you can apply the logic that a whale would apply to entering and exit the market, that's going to apply to your own trading, regardless of your size, because ultimately those are the people who are moving the market. So that mindset that they're using to get in and get out of trades is going to work with whatever size you're trading, because you'll end up trading in line with the way their methodology. And when I talk about the way that whales think, the way that they tend to operate is, they're very, very concerned with liquidity concepts just out of necessity, right? Because if you're trading with huge size, all of a sudden liquidity becomes a very real thing, right? You there's certain ways you need to trade to generate liquidity and to enter markets, and that's a whole rabbit hole in itself. I'll probably go down that in a separate video, but here I just want to draw your attention to the fact that the market is printing an extreme here, and a lot of times when we're looking at the chart, we're sort of the market or our indicators or the charts really aren't giving us a signal. Price is just trading within a range, and we're kind of looking through the chart to find something to give us an edge when it's not there. But then you also have moments where price is just, or whatever signal you're looking at, is creating an extreme outlier, and it's so obvious it's you can't ignore it, right? And those trade ideas or interpretations that are the most obvious and in your face are generally going to be the highest probability. Anyway, so let's switch over to the Bybit chart. Just give a brief update on my trading position. So if you haven't already watched the Bitcoin Trading Journal entry number 22 I posted yesterday, go take a look at that. But here you can see the trade has played out in my favor. And now the question is, how do I manage this trade now that we've gotten a leg up? Well, here's an area where I was going to add risk on this test down here. Ultimately didn't get a retracement down there. Did get a retracement down here, although I did not play that. But essentially, I had this take profit up here. Price came just above, didn't hit my take profit. So now, I'm not going to be rigid with that. I'm not going to demand that price, reach it directly. I'm going to be fluid with my expectations. And really, this is a good example of how, if I'm forced to choose between a price distinction on the right side of the chart or the left side of the chart, I'm going to choose the price distinction on the right side of the chart. And you may think, well, that's necessarily favoring the low time frames over the higher time frames. just out of, you know, the basic nature, right? The high time frames, you're going to have to look on the left side of your chart, and the low time frames are going to populate on the right side. Well, yeah, really, but, you know, hopefully I can get something that frames, that utilizes both. But in this context, right, I look at this, and if you get front run like that, sometimes, you know, for all intents and purposes, that was tested, right? Just front ran. So here, and now the actionable trade over here, right? You have this. So price entered a low liquidity state right here, right on the Monday session highs right here. Comes up, comes to resistance. You get volatility contraction right there. Pops above, comes down, tests, runs up. Now, anytime you get a pause like this, right, like a price pause like this, and then a leg up, and then price runs down to this bottom area right here, any run up to the highs is going to be a trade. So, you know, for here, that would be 3740, but just, you know, because this is a take profit, I'm just going to do 3700. Excuse me, yeah, 30,700. And again, price runs up there, I'll trade it. If price runs up, and then I can use a stop loss order at that order. Yeah, and really, and also I'll just hit the market with a market stop loss order just to manage risk, just in case that level doesn't get hit. So we had a sell there, another sell run up there. So we are managing risk dynamically. You know, I have a sell stop down here for a portion of the position, but really the majority is managed down there in the higher time frame. But now I can move this stop loss. Now the price has moved in my favor. I can start moving that major stop loss in my favor. So let's see, move that up to, what's that, 29050, and I'll move it just below the low. So, you know, if the low gets ran just barely to knock out the stops, you know, it won't necessarily knock me out. Actually, I give it a little bit more room to breathe. Yeah, but the idea is generally that, you know, price can come down here just wick below, won't stop me out, but for all intents and purposes, you know, if you get a blow through that level, it's basically stopping you out at the level. All right, guys. Well, I hope you enjoyed this video. If you like this type of content, just make sure to, you know, like the video, subscribe to the channel, and I'll catch you guys in the next one.